The Dirt with me, Mike Howell, an economics podcast where I present the down and dirty agronomic science to help grow crops and bottom lines. Inspired by eKonomics.com, farming's go-to informational resource, I'm here to break down the latest crop nutrition research, news, and issues, helping farmers make better business decisions through actionable insights. Let's dig in. Well, hello again, everyone. Welcome back to The Dirt. Glad you're tuning in this week, and we've got a familiar face in the studio with us today. We have Mark Tully back with us. Mark, welcome back to The Dirt. If you will, kind of introduce yourself to our listeners that may not have heard you before.
Yeah, thanks, Mike. Glad to be back. It's been a quick turnaround since my last visit on The Dirt. I'm Mark Tully with our global market research team here at Nutrien. My role with the organization is to cover all things commodity markets and macroeconomics with a keen focus on those fertilizer markets. And, there's been a lot of change since we last chatted, and looking forward to having a conversation again.
Mark, as you mentioned, we had you on June the 10th. If people missed that episode, you can go back and look at that. And before we get too deep into this, I'm just going to put out some timelines here for everybody, just so they know where we are. We are recording this on the morning of June the 25th. This podcast is going to be set to go live the morning of July the 1st. I usually don't tell people that when we get started, but things are changing so fast and this topic is so volatile, I don't know if this will be even relevant by the time it goes live. But I thought it was important to get this information out there. Mark, I'm going to take just a second and kind of set this episode up and why we decided to do this. Back on June the 13th, Israel attacked Iran. That's been in all the news. Everybody has heard about that. Iran returned those missile attacks, and that started what's being called the 12-day war. Fast forward a little bit to June the 22nd. That was Sunday night. The U.S. entered this conflict or war, however you want to look at it, but the U.S. struck some of the Iranian nuclear sites. We got up on the morning of June the 23rd, and Iran had vowed that they were going to retaliate against those U.S. attacks, and they threatened to close the Strait of Hormuz. When I heard that, I knew that we had a lot of focus in that area with the fertilizer industry, and I reached out to Mark to see if we could get a podcast set up to talk about the importance of this, how this potential closing of the Strait of Hormuz was going to affect the fertilizer industry. We put together a lot of information and talked all during the day on the afternoon of June the 23rd. And about the time we got ready to call it a day that day, we heard about the ceasefire announcement. So we decided we may have done all of this work for nothing. And then we got up the morning of the 24th. Both sides had violated the terms of the ceasefire, and it was back on. By yesterday afternoon, the ceasefire was back in play. I guess the question today is that ceasefire going to last? And what happens if it doesn't last? So, Mark, that's kind of a quick rundown of what led up to us having you back on. If you will, we know a lot about the Middle East region over there. I'm sure all of our listeners are familiar with the Gulf War and the fighting that's been going on for years in that region, and they know about the oil. So let's start there with the oil and natural gas. What's going on with those markets since the war got started back on June the 13th?
Okay, well, thanks, Mike. And I think that was a great overview. And like you say, it's been an extremely volatile period with a lot going on in energy markets as well as fertilizer markets because of the importance of that region for fertilizer production. But to talk about oil and natural gas that comes out of the region, approximately 20% of LNG or liquefied natural gas ships through the Strait of Hormuz. Primarily that product is coming from Qatar and the United Arab Emirates. And so a pretty significant proportion of global energy demand is met by the region from an export perspective, and why we saw some volatility in energy markets. About 60% of Egypt's natural gas imports actually come from Israel. And as the war kicked off, Israel closed 2 of their 3 gas fields. Both of those 2 fields that were closed were primarily delivering exports to Egypt and Jordan, both of which are key fertilizer producing countries. So we saw a whole bunch of supply impacts as a result of that, but also the market really pricing in a risk premium because of what could happen if that Strait of Hormuz closes. Beyond that, Iran's also about a 4% share of global exports of crude oil. And so it's a big region of the world from an energy perspective. So what did we see in those energy markets? Well, prior to the war starting, Brent crude oil was trading at about $69 a barrel. It peaked all the way up to $78 a barrel in a matter of a couple of days. But today, as we're recording this podcast, It's back down to actually $68 or so for that Brent crude. Natural gas, and I'm measuring this in a US dollar per MMBTU and looking at energy prices in Europe, which is a key import market right now. Natural gas, the day before the war kicked off, was trading at about $12.30 an MMBTU in Europe, jumped all the way up to $13.80. And as of recording right now, is down to about $12.15. So a ton of volatility, but I think what's important to share with our listeners is a lot of that volatility, like I say, was driven by a risk premium that the market was developing in the case of what if exports are impacted from a natural gas perspective with the closure of the Strait of Hormuz. What's different in fertilizer markets is we actually saw production losses and changes in total supply availability because of this war. And I'm sure we'll talk about that a bit more as we go through your questions, Mike.
Yeah, Mark, that's kind of where I wanted to go next. We know about the importance of natural gas in the production of nitrogen fertilizer. We've done several podcasts talking about that, but what we may not have addressed too much is the production of fertilizer in that Middle East region. I know there's a lot of nitrogen production, but I also understand there's P and K production coming out of that region as well. If you would talk a little bit about what all is produced in that region and where it's shipped and how it gets to the end user from there.
Yeah, absolutely, Mike. So I'll maybe start by just giving folks a total picture of production in the region. And this is including countries that are not necessarily directly in the conflict today. I'm looking at sort of the bucket of the Middle East with Egypt as well included into this total. And so about half of global urea exports comes from the Middle East and Egypt combined. 30% of global ammonia exports, about 30% of key phosphate fertilizers, so DAP, MAP, NPS products. About 10% of global potash exports come from Israel and Jordan. And about 50% of global sulfur exports actually come from the region as well, which is a key input in the production of phosphate fertilizers around the globe. And so when we think about the totality of the impact, if the Strait of Hormuz was to close and the conflict was to continue for an extended period of time, there's a lot of fertilizer product that's coming from this region that's meeting demand all over the world. One of the key impacts immediately seen from the conflict starting was increased logistical costs. So higher freight rates in the Red Sea and in the Strait of Hormuz, insurers who insure these large vessels that are carrying fertilizer products, raising rates because of the risk of these ships facing some kind of distress related to the conflict. And that's impacting delivered values around the globe. But I want to highlight the impact it's had on, a couple of key nitrogen producers, Egypt and Iran. Combined, Egypt and Iran account for about 20% of global urea exports. Each month, Egypt exports about 370,000 tons to the global market, and Iran exports about 480,000 tons. And so, even with this 12-day war, with both of those countries turning off production because of the lack of natural gas availability when the war kicked off here, we've lost in this not quite 2 weeks somewhere between 400 and 500,000 tons of urea that could be exported to the global market. And as each week goes by, with these producers down, we're losing as much as 200,000 tons of available urea that could be exported to the global marketplace. So it's a fairly impactful loss of supply, particularly for regions like Brazil, Turkey, Europe, even parts of India that would, traditionally be importing a lot of this volume at this time of year. With the ceasefire, we've got news just this morning, Mike, that Iran is planning to return their nitrogen facilities to production. And so when this podcast is published next week, we'll probably have the first couple days of nitrogen plants running again in Iran. The question ultimately will be at what rates and how much is able to come on. And, if this ceasefire holds the length of time between when we're recording and when we actually publish this. The other piece of the puzzle fundamentally is Egypt. This is the key demand season from an energy perspective in Egypt. They're importing a lot of energy. About 30% of their energy demand is now met from imports. And like I said, about 60% of their liquefied natural gas is actually coming from Israel. Israel has started to turn on their natural gas fields again and allow for some exports, but it may take more time for Egypt's production to normalize. Their urban centers require energy right now to meet a cooling demand for their urban population. It's the hottest time of the year at this point. And so those industrial plants, including nitrogen facilities, have been turning off at this time of year, even when there isn't a crisis and a lack of natural gas supply in the region. And so we're going to have to watch closely to see whether Egypt's able to normalize their productivity. I mentioned some of these other products that are impacted, things like ammonia exports from places like Saudi Arabia, the potash production and the phosphate production that's coming from Jordan and Israel. That fertilizer has not seen the supply constraints that urea has seen, but it's something we're watching closely. It certainly has been impacted by the rising freight rates, but we're not necessarily seeing a negative impact in total supply availability. Urea is the one where we have seen some pretty extreme volatility because of the supply outages. And as we're sitting here recording over the last couple of days, we've seen urea prices rise as much as $100 per ton relative to where prices were the day before the war started, Mike.
Mark, thanks for going through all of that. One thing you were talking about was the production coming out of Egypt. And I got to thinking about the map. Egypt is bordered on two sides by water. It's got the Mediterranean Sea to the north and the Red Sea to the east. I'm assuming the fertilizer is moving out of both of those bodies of water, or what percentage is coming out of each one? Do you have an estimate on that?
Yeah, so Egypt's exporting about 4.5 to 5 million tons of urea per year. A lot of it's going through the Red Sea, Mike, as it's looking to ship product to some of those, we'll call it east of Suez markets in Asia, as well as markets in Latin America like Brazil. But they're actually a big importer into Europe and Turkey in particular. And so that product would be throwing through that Mediterranean Sea, moving north into that European market. And so both markets, frankly, would be impacted by Egypt essentially just turning off production in full. But it's the Red Sea market in particular that's actually also seeing that premium freight rate developing. And so their delivered values to those markets that I mentioned in sort of the southern hemisphere and eastern hemisphere that are going to see some impact to cost to serve as well.
Mark, we mentioned the importance of the Strait of Hormuz. And one thing that I was seeing on the news, there were some ships that were avoiding that area earlier in the week, sailing on a different route or changing their route altogether. Do we have any idea of any fertilizer vessels that may have been impacted coming through that earlier in the week?
Certainly impacted because of the cost of production and the cost of freight rates, Mike. In terms of markets explicitly avoiding the Strait of Hormuz, haven't seen a lot of news on that beyond just the sheer loss in Iranian production, all of which would be traveling through that Strait of Hormuz. In fact, the Iranian producers were actually flaring off their ammonia inventory, so literally burning them as a safety precaution because of the missiles that were hitting Iran through this war and the risk of if it was to hit an ammonia tank or something like that, the potential risk and loss would have been pretty dramatic. But I think just to give our listeners a little bit of a concept of how important this Strait of Hormuz is to overall energy and fertilizer commodities, I'll hit on a couple of this. So keeping in mind, this Strait of Hormuz is used by Saudi Arabia, Qatar, the United Arab Emirates, Iran. It's a major pathway for some key producers. About 20% of global liquefied natural gas is moving through that Strait of Hormuz. About 20% of global crude oil is heading through that. Somewhere around 30% of global urea would travel through there, somewhere between 25 to 30% of global ammonia exports, somewhere around 40% of global sulfur exports would be leveraging that strait. And so very significant impact to global energy and global fertilizer markets if this war was to pick up again and we do see that strait closed, Mike.
Well, Mark, we've covered a lot and talked a lot about the importance of that region. We certainly hope that nothing else is going to happen over there. I hope the ceasefire is going to last for a while this time. But we wanted to get this information out and let people know what the importance was of that area, let them kind of get a feel for that and make plans accordingly to that. Mark, we've covered a lot of information. Is there any other information that you think we need to get out there while we have you today?
Yeah, I think it's important, Mike, that we share with our listeners some of the immediate impacts that have happened because of the loss of supply on the demand side. It's not just that we lost production, there were some key importers that were impacted as well. And the one key storyline I'd want to highlight is India. So the day before the war kicked off, India was in the process of closing a massive import tender of about 1.5 million tons of urea. Because of the war and the loss of supply and uncertainty and availability, India was only able to procure about 300,000 tons of product out of that 1.5 that they were looking for. And they've actually come back to market just this week asking for a new tender to the market of 2 million tons and looking for delivery by the middle of August. And so it's a pretty significant volume that India's in the market for today. And like I mentioned, we've lost about 500,000 tons of prompt supply availability in this June, July period because of the production outages so far from Iran and Egypt. And so this is a key storyline that I think will continue in the urea markets for a little bit longer than maybe just the ceasefire because of some of these key markets that are looking to import. I'd say the other thing that's important to mention on the demand side, and we talked about in our last conversation, Mike, was we are in a weaker crop price environment. Is this, North American crop is in the midst of development, and we're certainly hearing from some of the southern hemisphere buyers with this surge in nitrogen prices recently. There's some additional caution. Buyers waiting to see what's going to happen with prices before they're stepping in. Certainly examples in Brazil of buyers holding off on some of their nitrogen decisions at the moment. And so as we get clarity with this situation and supply returns, I think there is going to be some pent up demand in the market to fill some storage and pick up some inventories ahead of some key seasons in the southern and eastern hemispheres here around the globe from an application perspective. And that can certainly impact some of these summertime availability and pricing, particularly in the urea complex, even beyond when this war ends.
Mark, as always, we appreciate you taking time to do this. I know we did it on a short turnaround this week. You worked above and beyond to get it out there for our listeners. Listeners, we hope you enjoyed this. I hope you got something out of it. And if you'll hang around for just a couple of minutes, we'll be right back with segment 2. Farming isn't farming without questions. And now there's a place to go for answers. At eKonomics, an entire team of agronomists is waiting and ready to help for free. No question is too big or too small. Visit Nutrien-economics.com and submit your question with the Ask an Agronomist feature. Listeners, welcome back for segment 2 of The Dirt. As you know by now, segment 2 is where we ask one of our agronomists an agronomy question of the week. Today, we have Dr. Carl Wyatt back with us. Carl, welcome back to The Dirt.
Thank you for having me.
Carl, today's question has to do with a theorem in agronomy that one of the first things I learned when I started going to school, learning about crops and soils, and it's dealing with Liebig's Law. Tell us a little bit about Liebig's Law of the minimum and how this law helps growers better understand their nutrient management plan.
Sure, yeah. I think this is the first thing I learned as well. It's this idea where let's just pretend we've got a barrel and we're trying to fill it full of water. The height of that water in the barrel is your yield. If you have some sort of nutrient that's low in supply in your soil, here we can represent it as the stave on that barrel. However high that stave goes in the barrel really represents the top, how high you can get the water in the barrel. So if you got like a real low stave, you're going to leak water. You're not going to be able to fill the barrel up. Now you've really satisfied this sort of law of the minimum, saying that whatever's in least supply in this reaction that we call farming every year, we have sunlight, we have nutrients, we have water and soil. So we have these different ingredients. Whatever's in least supply, that's what's going to limit your yields ultimately.
Carl, I know there's a little bit of debate about how relevant Liebig's Law is these days. And one thing I've always questioned about Liebig's Law, it only pertained to nutrients and it didn't put in other things like sunlight could be a limiting factor. Water could be a limiting factor. There's so many other limiting factors, but I do think this is a critical thing that people need to be aware of, but I don't think that it quite addresses everything that could be going on in the field.
Sure, yeah. When you think about it, let's just focus on crop nutrition. When we have, let's just say, for example, very low potassium values in the soil, that potassium is going to limit your yield. So naturally, you might want to focus your input dollar on potassium. Try to raise that soil level up, that supply level, raise the height of the stave in the barrel, to go back to that earlier example, and make sure that the potassium is not limiting your yield. Now, what I'm not saying is cut everything else out at the expense of potassium, just focus only on potassium. I think that's where there's been some misinterpretation of this idea over the years. Really, we're looking for your total program and you're making those tweaks every year to really find, what do I need to pay just a little bit more attention to without shorting the nitrogen, without shorting the phosphorus or the micronutrients, because it is a barrel. There's multiple staves in that barrel, multiple nutrients. We're really just trying to tweak and fine tune and make sure that crop is not going without during the season.
Carl, we really appreciate you taking time out of your busy day to visit with us. We really enjoy these segments and hope our listeners are getting as much information out of them as we are. Listeners, thank you for tuning in today. As always, if you need more information about anything we've covered today, you can visit our website. That's Nutrien-eKonomics.com. Until next time, this has been Mike Howell with The Dirt. Hey guys, if you like what you heard today, do us a favor and share this podcast with someone else. It could be your neighbor, your friend, your crop advisor, or whoever you think would enjoy it. Your support helps ensure future episodes, so please like, subscribe, share, and rate the show wherever you're listening from.